Thinking about buying a home soon, but you're not sure if you're actually ready to apply? I talk to people every week who want to buy a home. A lot of them say, hey, I want to buy a home in the next 6 months to a year, and they all have the same question. What do I do to prepare to make it easy to buy a home? The good news is you do not need to have everything perfect to talk to a lender. However, there are 3 major areas that can definitely help get you prepared to buy a home. So in this video, I'm breaking it down into 3 simple categories: income, savings, and credit. The first is income and employment. This is where lenders will determine whether you have stable income to support your mortgage payment. Number 1 is job stability. Ideally, you've been working consistently for the past 2 years. Not necessarily at the same employer. You can switch jobs, you can get promoted, you can even change companies. What lenders usually look for is 2 years work history in that line of work with stable income and reasonable progression. Number 2, income consistency. Income gets calculated differently depending on how you're paid. If you're 40 hours a week hourly or salary, the income calculation is pretty straightforward. Your paychecks are consistent, you get paid the same pretty much week to week. It's very easy to approve. If you are commission or overtime, you get a lot of overtime or bonuses or tips, that's calculated a little differently. The lenders will generally look at a 1 or 2 year average, depending on how long you've been in that line of work, to calculate what they consider to be variable income. Self-employed borrowers are even trickier. They're going to look at your tax returns, both business and personal, and they might ask for things like profit and loss statements. Self-employment income is more closely scrutinized by lenders. Number 3, debt to income ratio. This one is huge. Lenders compare your monthly income versus your monthly obligations. Things like car payments, credit card payments, student loans, personal loans. They all factor into what the lender calculates to be your debt to income ratio. If too much of your income is already committed to your current obligations, getting approved gets trickier. So if you're planning on buying soon, avoid taking on any new debt. That new truck payment can definitely affect your mortgage pre-approval. Next is assets, or simply put, how much do you have saved for this home purchase? Now, a lot of buyers assume they need 20% down. That is a myth. You do not need 20% down to buy a home. I help people, especially first-time home buyers, buy a home all the time with 3 to 3.5% down. If you're a veteran or you're looking at USDA loans, it can be as low as 0. But even with low down payment options, you will still need some money saved up for things like closing costs, appraisals, inspections, prepaying your taxes and insurance for a year. A lot of those things add up. We'll need some money in the bank to buy a home. Here's what I recommend. Keep your funds documented. Lenders generally like to see assets that are easy to verify. So we're talking about checking accounts, savings account, bank accounts. We can't use the money under the mattress. The easier the paper trail, the easier underwriting tends to go. Avoid unusual large deposits. Lenders do not like to see a bunch of money showing up right prior to closing. They generally look at your last 2 months of asset statements, and any large deposits can trigger more questions. There are processes in place if you're getting a gift from a relative, or if you have cash you're depositing, that often has to be backed out because we can't verify where it's been. So we want 2 months of asset statements without showing large deposits if possible. Also, you're going to want to start building reserves. Even if you qualify with a low down payment option, and let's say hypothetically the seller's paying all your closing costs, you're still going to want some money left in the bank after we close. Buying a home often comes with things like having to replace a water heater or an air conditioner or a plumbing issue. Lenders don't want to see you spending the last dime you have in your account on purchasing the home. They generally want you to have some money set aside. The lender wants you to have a rainy day fund, and cash reserves can create flexibility. Third, and the one people stress out about most, is credit. Here's the truth. Your score matters, but your overall credit profile matters as well. The lender's not just looking at a number. They're going to look at your credit history to see, are you making your payments on time? Definitely want to avoid any late payments prior to buying a house. So make every payment on time. Another great tip is keeping your credit card balances low. This is one of the fastest ways many buyers can improve scores. If possible, keep your revolving balances low and show that you're not utilizing the entire balance on your credit card. If your credit card balances are high, paying them down can help often have a very positive impact on your overall credit score. And this is a big one. Avoid opening new accounts prior to buying a home. You definitely don't want to open up a new credit account, especially once we're under contract. That can often throw a wrench in the works, so to speak. The lender will want to verify what's the payment, what's the balance. A lot more paperwork will be required. So hold off on buying furniture until you own the home. And lastly, if your score isn't where you think you need to be yet, that's okay. Give us a call. We can give you a free mortgage consultation, give you some helpful tips on your credit. I've helped a lot of buyers get where they need to be to buy a home. So if you're thinking about buying a home soon, focus on these 3 things: stable income and employment, money set aside for the purchase, and healthy credit habits. You do not need to figure it out on your own before reaching out. A quick conversation can usually show where you stand today, how much you may qualify for, and if there's anything we can improve before you buy. So if you're planning on buying the next 6 months or even year, feel free to reach out. I'm always happy to point you in the right direction. And if this video was helpful, hit the like button, subscribe, and maybe send it to someone that's looking to purchase a home in Florida. Thank you. See you next time.